again, everyone. Jerry Hogenhout here with Canadian Investment Services. Welcome to another one of our episodes of our tax and investment snippets, where we take a topic and we talk about it, give you a little more insight into that topic. Today we're going to talk about what we call REITs, real estate investment trusts. Okay, so we call them REITs. Real estate investment trusts are, in my opinion, one of the best type of investments out there, because, well, it depends what type of REIT. I like the residential apartment REITs. Okay, there's many different type of REITs, but today we're going to talk about the residential apartment REIT. I like it because the REITs I like are really geared towards as much the low to medium rent. So it's not the high-end apartment buildings, it's actually just the blah apartment buildings that have people in there paying between $1,200 to $2,500 a month rent. I like them because those type of apartments are affordable. The vacancy rates are next to nothing. The minute a tenant leaves, we usually always have many other tenants who will take those properties. I do like the REITs that are within the 2-hour radius of Toronto. Okay, I try to stay away from REITs inside of Toronto because that's just a very high-priced market. You need a lot of rent to make the math work, which adds a little bit of risk to the component. I like 2 hours outside of Toronto. I like going from London to Kitchener to Owen Sound to Orillia to Peterborough. That whole area outside of Toronto, I think, is a good investment area. As the transportation tentacles to Toronto, reach out further and further and become more functional and a better alternative. Living in places, an hour or two out of Toronto become more feasible and more attractive. And as such, we just see that these REITs with the apartment buildings, okay, their vacancies are nothing and they can bump up the rents. So it becomes a good investment. So again, with the apartment REIT, a REIT is a fund, okay? So it's a fund, it's an investment vehicle, it holds various apartments, okay? So let's just use an example where we have a REIT that holds 10 apartments. And let's say they're within our desired area of within a couple of hours of Toronto. So the REIT itself, inside the REIT, it's pretty simple. The people that run these REITs, they collect the rent, they manage the building, they pay the cost of the building, property taxes, heat and hydro if they have to, or if the tenants pay it, but repairs and maintenance, so they're paying all the costs. It's just like you owning a rental property yourself. So the company that owns these, they'll collect all the rent, they'll pay all the expenses, they'll take their management fee, and they have rent left over. So some REITs will distribute this to the investors. Other REITs might distribute half to the investors, keep the other half because they want to buy apartment number 11. They might keep all of it to plow back into the buildings to renovate the apartments so they can increase the rent. So each REIT has its own characteristics, but the fundamentals, again, I like the ones that I like the REITs that hold apartment buildings. I like the REITs that are within a 2-hour radius of Toronto. And of course the management of the REIT is very important. The nice thing about a REIT, it falls under the private equity. So in order to invest in a REIT, we have to go through the private equity market, which requires us to go to find a licensed exempt market dealer. So that's how we process these orders through them. But they're private equity companies, and as such, we have a much better access to management. Okay, when we talk about stocks on the publicly traded stock exchange, we have no access to their management. When we talk about REITs in the private equity world, we go in and meet the owners, we go in and meet the managers. We have a good boots on the ground relationship with the companies that manages these REITs, and that's very important. REITs require an annual audited financial statement. I'm an accountant, okay, I can read these things, so these are important documents. I always like to, it's funny in the investment world, I just find most investment advisors are chasing rates of return without really properly protecting the capital. Okay, I like doing it the other way around. I like protecting the capital first than trying to get a decent rate of return. There's nothing better to protect your capital than a REIT. You are protected. Your money is secured by an apartment building. It's not going anywhere. They have to maintain it. There are government standards that these buildings have to be maintained too. So it's not like these things are going to fall into the ground. They will always have tenants. So in order to, as far as protecting your capital, I find a REIT is a great investment. Okay. Now it is, again, it's the REITs are found in the private equity world. There's many different types of REITs. So do your homework. Hopefully you understand a little bit more about them. They're definitely worth looking at, and I'm glad to give you some more information if you want to talk further about a REIT. Thanks for joining me today. Have a great day, and we'll talk to you soon. Bye-bye.